Hi, everyone. Thanks for joining. Just gonna get everyone admitted and then we'll get started here in just a moment. All right, so we are recording today's call. So if anyone joins late, they'll be able to see this afterwards. But just for time's sake, we'll go ahead and get started. So welcome to the 2022 Greater Colorado Pitch Series Ask Me Anything, and thank you for joining us today. Just a few logistics before we get started. Please make sure you are on mute unless you're coming off of mute to ask or answer a question. We will be looking at the chat, so if you have a question, you can either use the raise a hand feature or throw your question in the chat and we will moderate it and answer questions. We're going to do an overview of GCPS and then we will answer all questions at the end. So feel free to write them down or throw them in the chat along the way. So my name is Kiki Hooten and I'm the coordinator for the 2022 Greater Colorado Pitch Series. Thanks for joining us in this Ask Me Anything event today. I'd like to kick us off by first giving a big shout out to the sponsors of GCPS. The Greater Colorado Pitch Series would not be possible without our supporters, so thank you for the support. Let's see, clicking will work. Okay, so GCPS is back in its third year to find and propel 8 leading rural Colorado businesses to the next level. So far, over $7 million have been invested through the event, with winners ranging from software to cooperative farming. Powered by a fast-tracked remote application process, Greater Colorado Pitch Series 2022 builds off last year's efforts to source and support the diverse makeup of rural Colorado founders. On this slide, you can see some of the stats from last year's event, which you can also find on our website. So who is the Greater Colorado Pitch Series for? Any founder located in rural Colorado, which is outside of the Fort Collins through Colorado Springs urban counties, is eligible to apply. We made the application process even easier than last year, reducing completion time to 15 to 30 minutes. You'll be asked about some basic financials, your market share, and unique proposition, as well as for your pitch deck. This single application will be used for all 4 capital tracks. If your application makes it to the second round of review, additional financial documents will be requested, and those documents may differ based on the capital track partner. If you applied last year, you are absolutely encouraged to apply again this year. There are 4 different capital partners for Greater Colorado Pitch Series with 4 different capital tracks or pools of investment, which allows for funding opportunities for all types of rural Colorado companies. I'll go over the tracks now briefly and then introduce you to the capital partners a little later in the event. I've also thrown into the chat, I'll do that now, the 2022 capital partner criteria doc, which has the detailed criteria for each of the tracks. So starting off with Greenline Ventures and our debt growth stage with an investment amount of $250K up to $1 million investment. Next, we have the Greater Colorado Venture Fund, which is our venture seed track with a $250,000 investment. Next, we have First Southwest Community Fund, our debt pre-seed track of $50,000. And finally, our new partner, Western Colorado Angels, our venture pre-seed track with $25,000 up to $50,000 of investment. Each capital partner has its own review process for selecting an investment. However, Greater Colorado Pitch Series is committed to improving our efforts towards a more inclusive capital ecosystem. Based on best practices, we are helping reduce biases by first using a blind, meaning completed individually from each other, scorecard for initial screening applicants. The combined scores are then used to move on top applicants to the appropriate capital track. We also collect the same objective information from all applicants through our single application process. Finally, GCPS is providing the Diversity VS toolkit and bias reduction checklist to all of our capital track decision makers so that they can use these tools in their decision-making process. If you'd like to learn more about those tools, you can do so on our website. The Greater Colorado Pitch Series culminates in a 2-hour hybrid event, allowing folks to join us in Grand Junction as the kickoff for West Slope Startup Week or from the comfort of their home. Live attendees are invited to the after party where they can meet the pitch winners, investors, and the leaders in rural Colorado's entrepreneurial ecosystem. New to 2022, founders can directly enlist the support of the GCPS audience. In past years, the Pitch Series audience has been known to provide investment, mentorship, customers, and more to GCPS founders. Through an audience platform, this year's event will multiply the community support of GCPS founders. We are so excited that the Greater Colorado Pitch Series is the official kickoff event for the West Slope Startup Week, a week-long conference for entrepreneurs, small business owners, makers, techies, and more. You can attend 40+ free educational workshops and networking events virtually and in person across the West Slope. You can find the full schedule of events and register for both West Slope Startup Week and Greater Colorado Pitch Series at westlopestartupweek.com. So here's the timeline for the Greater Colorado Pitch Series. Applications opened on May 2nd, and they will close on June 10th at midnight. From there, the capital tracks will review applications and begin the due diligence process. Finalists will be announced by June 20th, but many applicants will receive notification that they did not advance much earlier. Of the 8 finalists, winners will be notified by July 8th, and the grand finals event occurs on July 12th in Grand Junction. Here's the same timeline with a little deeper dive into the process for finalists of Greater Colorado Pitch Series. Due diligence begins as soon as applications close and will go on until July 8th. As I mentioned before, each capital track will ask for different materials during this process. Once the 8 finalists are selected, they will start crafting their pitch video. The pitch video will be using Loom, an online recording software with guidance from our production company, Glevity. In addition, each finalist will receive one-on-one time with a speaker coach for their pitch video. Finalists will be expected to attend the event in person in Grand Junction on July 12th. We are so lucky to have strong partners for Greater Colorado Pitch Series, and Startup Colorado is a huge supporter of this event. They will be covering the costs of finalists, which includes travel, one-night lodging, and meals for up to 3 founders to attend the finalist event in Grand Junction. We're also really excited to announce that we're bringing back the Female Founders Awards this year, presented by First Southwest Community Fund and Venture Best. And yes, that is plural because there will be 2 award winners. Both will receive $3,500 in support, which includes a little over $1,000 of in-kind legal support from Venture Best and $1,250 cash from Venture Best and $1,000 cash from First Southwest Community Fund. Teams with majority female founders or executives are eligible, and you can find the application on our website, or the link will pop up immediately after submitting your application to Greater Colorado Pitch Series. So now to introduce you to our capital tracks, starting with the venture pre-seed track is Spencer Ingram with Western Colorado Angels with an investment amount of $25,000 to $50,000. Thanks for being here, Spencer. Can you tell us a little bit about Western Colorado Angels and your capital track?
Thanks, Kiki. I'm going to go ahead and drop into the chat what I'll cover here. What is the Colorado Angels? What is an angel club? I'll talk about who we invest in, and then I'll talk about how we invest and what you can expect from this track. And then I've got to link into the Western Colorado Angels website. So first, what is an angel club anyway? We are a community of individual private investors. So collectively, we come together and pool money to make a single investment. And that might sound like it involves a lot of people that you're going to have to communicate with and so forth. But actually what we do is we make one single investment together. So you don't have to worry about all those different checks coming in. It's just one pool of money. The second thing, who we invest in. So we are looking for typically early stage companies You may have customers or at least commitments from prospective customers. You do not need to be venture scale. So you don't need to be a home run billion-dollar unicorn company to be attractive to us. And I'll get into how we structure some investments in a moment to reflect the scale of your company or the aspirations. You may also be in business for a few years, and now you're really ready to go maybe full-time or grow into the market. So we're looking for that early stage. Now, how do we invest? We invest both equity and through debt. So equity is where you exchange a part of your company, ownership of your company for that capital, or an option for us to purchase that ownership in the future. And then debt, we structure, unlike a traditional loan instrument with interest, we do what's called a revenue-based repayment. So this is very founder-friendly because it can help float against the revenue that you have coming in, as opposed to being held to a typical interest-bearing repayment period. So those are our three big parts of the pre-seed track. I'm happy to answer any questions when we get to the Q&A.
Awesome. Thanks, Spencer. Advance our slide here. Okay, so next we have the debt pre-seed track for $50,000 with First Southwest Community Fund. We're joined by Azrael Madrigal. Azrael, can you introduce yourself and your track?
Yes, of course, Kiki. Thank you so much. Hi, everybody. My name is Azrael Madrigal. I am the Acting Executive Director and Program Director for the First Southwest Community Fund. We are a nonprofit lender based out of Alamosa, Colorado, but we do programming across the state of Colorado with the primary focus in rural areas and rural entrepreneurship and funding historically underserved communities. So we have an invested interest in funding entrepreneurs who are members of the BIPOC community and, of course, women entrepreneurs. This year, we are continuing. If you were familiar with last year's process, we are doing the debt pre-seed for $50,000. And sorry, I'm pulling out my little question cheat sheet. And the parameters of who we're trying to invest in is really for those companies who are either just starting out and need to establish their operations a little further, or in the beginning stages where they are a little bit more established but are looking to do some small scaling. So those are the type of entrepreneurs that we are interested in investing in, with also looking at entrepreneurs who may not traditionally fit in the traditional financial system and may have issues accessing affordable capital otherwise. So those are those parameters. Kind of looking at the ideal entrepreneur that we would like to fund is we really want to see somebody who, again, is in rural Colorado, which I guess is all of our entrepreneurs, but we're looking at folks that are trying to make big changes and address big service and product gaps within their community or within their region. And that can mean a lot of things. So we're really, really excited to get a variety of applications and review this and see how we can best serve some of these rural Coloradans and really in those early stages. And I guess my spiel was a little bit shorter, but I am happy to answer any additional questions in the Q&A section.
Great. Thanks, Azrael. Our third capital track is Venture Seed Track with Jamie Finney with Greater Colorado Venture Fund. The Venture Seed Track has an investment amount of $250,000 plus. Jamie, will you tell us about GCVF and your capital track?
Sure. Yeah, so my name is Jamie Finney. I'm one of three partners with the Greater Colorado Venture Fund. So we are a seed stage venture capital fund. We invest in companies only in rural Colorado. So that's kind of that same anywhere in Colorado outside of the Fort Collins, Boulder, Denver, Colorado Springs area. And yeah, we invest typically 250,000 is kind of our standard check size that can flex up to 500,000 plus, depending on a company's capital need. But for the purposes of this event, we've really committed to absolutely writing kind of our standard check size. We are, seed stage venture capital. So breaking that down, that means we typically invest for equity ownership in a company. We can do that in true equity. We can do that in convertible notes or safe notes, things like that. They're all kind of just documents that turn into equity anyway, so we're pretty flexible in that regard. And then, yeah, we'll own a portion of the company. When we engage with the company, we typically, or invest in a company, we look for a pretty high upside. So we're definitely on the kind of high risk, high reward end of the spectrum. Oftentimes we like to say we're looking for kind of a base case where this company is able to really grow 5x, 5 to 8x. But we want to also kind of see a potential for the company to kind of uncap its growth and become sort of 10x plus return. So it's definitely kind of a pretty aggressive growth profile. Oftentimes when we work with companies, they have not raised any outside funding, or they've raised just a little bit of funding, usually from kind of angel investors or groups like Spencer's with Western Colorado Angels. So we often kind of come after that with a little bit larger check. Companies sometimes are pre-revenue, but more often our sweet spot is a few $100,000 in revenue, and companies are starting to show signs of product market fit. And we dig in, so we get pretty involved with our companies. So we're typically the most active investor on the cap table. Partnering, we do retreats and things like that. So the company that wins our track is just a part of our venture capital portfolio alongside the rest of our 28 companies. So we'll invite you to the cohort retreats with the rest of the companies. We will be kind of partners in your growth, no matter what happens, rain or shine, whether it, uncaps to a giant multiple and we all become gazillionaires, really just you in that case, or things don't go well, we're there no matter what. So we're kind of a hands-on partner. Our investment process is, I would say, often kind of it's pretty thorough, but maybe less formal than often say like a bank loan. We set up calls with founders. We really put an emphasis on the people, because oftentimes with venture capital investments, things are so speculative that it's hard to know the exact things as you might for a company with a little bit more operating history that's bankable. So we really look hard at kind of the team and the people. And yeah, that's kind of our high level. We will do follow on into companies if they are showing signs of coming out of that kind of seed stage and coming out of product market fit and into really being able to scale. So we do reserve money for follow on investments. And that's about it for the GCVF Venture Seed track. Excited to answer more questions as we get into it.
Great. Thanks, Jamie. Finally, we have Patrick Vahey with Greenline Ventures for the debt growth stage track with $250,000 up to $1 million in investment available. Thanks for joining us, Patrick. Can you tell us about Greenline Ventures in your track?
Yes, well, thanks for having me, Kiki. So Greenline Ventures is a firm. We're based in Denver. We have an office in DC, and our primary business is we manage kind of tax advantage funds that provide growth capital primarily in the form of debt, typically subordinate debt, to companies throughout the nation. All those companies must be located in low-income communities, and we do it in an effort to create jobs for low-income persons and residents of those communities. And so that's kind of a national product that we have, but being located in Denver, we often, and a decent amount of our portfolio is based in Colorado. And in addition to that, we manage a couple funds that are Colorado focused and specific. And so with this track, we've got kind of multiple funds out of which we can provide capital to potential companies. And it can be as low as $250,000 and as high as a couple million. I think we put in $1 million here just for setting expectations. But I think last year we were this pitch series was a great resource for us, and we ended up approving 2 applicants, one of which we provided $1 million of growth debt, and the other, I think, a little over 2. And yeah, we've been fortunate to work with Jamie and his team at Greater Colorado Venture Fund. I think we've got a handful of loans to their portfolio companies. Let's see, we're generally providing loans to companies that are not yet bankable. They almost all have revenue and product market acceptance. We generally like to see profitable companies and EBITDA positive, but that's not always the case. So we do provide venture debt to companies that are revenue positive, but are spending on market share and in growing, and thus not profitable. So we've got a wide swath of types of companies, industries, and spaces in the capital stack where we can fit. So we'd like to, we're pretty flexible. As I said, a lot of our business or a lot of our activities involved with tax advantage funds, and those enable us to provide subsidized financing that's kind of below market rate relative to what traditional providers of this type of capital would provide. But those are for companies that are located in low-income census tracts. And, with this and with the funds we manage that are not tax advantaged, but focused on Colorado, we have a specific focus on or interest in financing companies that are outside of the front range, similar to what Jamie and Greater Colorado Venture Fund is doing. So we're focused on companies pretty much anywhere outside of, the Denver, Colorado Springs, Fort Collins corridor. And our application and review process is pretty fluid, and we can turn around and make decisions quickly. But we do end up doing a lot of diligence, when we're writing checks of this size, particularly to companies that are, not yet profitable or just barely profitable. And we really want to dig in, and we focus on management team, product acceptance, ability, historical ability to execute, and and then as far as working with the teams, we oftentimes provide financial kind of counseling and advice, both on raising equity, but then more so on ways of, once they grow and our ability to have the ability to take out our position with debt, we facilitate, with bank debt, we facilitate introductions to various banks that provide a cheaper source of capital than we do. And that typically occurs, 2 to 3 years after our loan comes into the company. And we like to see, we provide it for growth. And then once the company's executed on its plans, we seek to be refinanced with traditional kind of bank type debt. That's about it. Happy to answer questions and look forward to this pitch series.
Awesome. Thanks so much, Patrick. Azarel wanted to mention one more thing about their Spanish-speaking entrepreneurs. Azarel?
My apologies. That was poor planning on my part. But hi, everybody. The other thing I wanted to mention, and I'm going to repeat this in Spanish and English, for those entrepreneurs that may be going back and watching this video that may be Spanish speaking only, our track, and I can't speak for the other tracks, but our track will be extremely interested, helping support somebody like that. And we are prepared to do translation in all of our due diligence documents. So para todos mis emprendedores que posiblemente están viendo esto, si solamente hablan español, échenles ganas y apliquen también, porque los podemos ayudar y podemos traducir todos los documentos en español. Thank you. Sorry about that.
Thanks, Azrael. So you can find our full FAQ doc where we really answer as many questions that we typically get about GCPS on our website. In case you need it, I can also throw it in the chat for everyone here now. And with that, we will stop talking at you and we'll now let you all take the floor and ask any questions that you might have for us.
I've got one from Jay, and I'm just gonna let him ask it himself. Right. Hopefully he's able to unmute and go for it. Jay, are you there? Do you want to jump in with your question?
Hey, Jamie, can you hear me?
Yep.
Awesome. Sorry about that. Yeah, so I'm just curious about the types of like companies that can and or should maybe apply. If we have like a really traditional like lemonade stand or something like that, that could potentially like see an avenue to scaling, does that make sense to apply? And then the second part of that question, which is also related, are seed stage NFT and or blockchain projects permitted, especially in light of the crypto crash, or is that something like you guys just don't want to see?
Sure. I think I can hit on some like high level guidance on there, and then Spencer, Azrael, Patrick, feel free to like jump in with any clarifications for your tracks. Starting on kind of the way you phrase like lemonade stand with major opportunity to grow. So I'd think about that as like two parts. The call it like core brick and mortar lemonade stand, sort of servicing local business, local customers. My guess is that's a best fit for the First Southwest Community Fund track, or potentially Spencer's Western Colorado Angels track. And that probably remains true for starting to get into the like scaling opportunities, manufacturing. And then I think at that point, it's probably still a little bit early for GCVF, so still kind of in the realm for I think the kind of pre-seed tracks. And then I think jumping into the high-tech NFT seed stage blockchain Web3 buzzword tech company. Yes, GCVF at least has invested in companies that do kind of touch on blockchain and Web3. We typically don't invest in like a SAFT or something where we would be buying tokens, but we're absolutely built for supporting tech companies ourselves. I don't know the stance of the other capital partners on that part.
That's awesome. Thank you so much, Jamie. Appreciate it.
I'm happy to address it from our perspective as far as what our track is. On the lemonade stand, if to use Jamie's example of a brick and mortar store, if it was, a unique lemonade stand concept with several profitable stores, we would be interested in providing, a debt facility to grow and add additional stores, or potentially capital to franchise and start a franchisor business. But once it's up and running, and there's several up and running, and there's sufficient revenue to support debt of 250 to 2 million, what have you. On the NFTs and crypto, that is not a space we play in. We generally don't finance financial assets. Blockchain technology, we certainly are very interested in and able to provide capital to technology supporting those, but we don't invest or lend to crypto NFT assets. Hope that helps.
Perfect. Thank you, Patrick.
I don't think the First Southwest Community Fund track would be a good fit for the NFT blockchain projects. However, to your question about the lemonade stand example, the First Southwest Community Fund has an inherent interest investing in culture. So if it is scaling, just as an example, if a Mexican entrepreneur wants to do a hibiscus water bottle project, manufacturing thing, that culinary entrepreneurship that involves lifting historically underrepresented cultures, that'd be something that we would be interested in exploring. So just as another kind of broader example.
Yeah, I'll just wrap on this as all the folks here representing these tracks are a resource to you regardless of the outcomes of the pitch competition. So if you apply, it just gives you visibility for us to help you however we can, and regardless of what you're working on, regardless of stage. So think of us as just air traffic control to begin with.
Yeah, that's such a good point.
I fully agree. Very well said. We're interested in helping in any way. We also have kind of a microloan program for Colorado businesses that were impacted by COVID. So please don't hesitate to reach out with questions or we're here we want to help Colorado companies.
Totally. It's like we have 4 different forms of capital lined up for this event, and we all have be it connections or via our own forms of capital, plenty more to access. So yeah, air traffic control is a great way to put that. Seth, I'm gonna hand the mic over to you. You're actually next. And then Chris Shiver, you'll be after Seth. So Seth, if you want to unmute, I think I just unmuted you, go ahead.
Can you hear me?
Yes.
Yeah, so my question is, as a individual interested perhaps in supporting firms that have interest on a local level, or for that matter, on a regional level, do the entities, Greater Colorado Venture Fund, et cetera, need capital from individuals who want to participate, or is this something that's already controlled and essentially these organizations are controlling these stages of call it the funding process, or are they also looking for funding individually to increase their capabilities?
Were you planted by Spencer? I feel like you were. Spencer, I'll let you take that one.
Yeah, we're as the pre-seed or angel track, we are probably best situated to take on additional individual investors. I'll drop you my contact information via the chat, Seth.
Okay.
Yeah, and so that's how we will make our investment, is through pooling a traditional angel investment round together. And as I say that to this group, that is not exclusive to accredited investors. The opportunity coming out of this pitch series may be, but we do have the capacity now, and we haven't really announced this, that we're going to be able to take unaccredited investors as well. So if you are an entrepreneur, you can also get in on the investing action.
GCVF wise, we're a kind of pre-committed pool of capital from investors. So we're investing out of Fund 1 right now. So we aren't necessarily taking investors into our own fund vehicle for this event, but we do regularly have folks co-invest alongside of us. A lot of times we actually really like having local money in. We travel a lot, so we get a lot of face time, but nothing really replaces just having someone involved in your company financially who's just available for sort of the, hey, can we grab a beer this afternoon? Those kind of talks. So we play nice with co-investors, especially when they're local.
Yeah, as far as from Greenline's perspective, our capital is all institutional, and we don't accept or work with individual or retail investors, but we always like co-investors, or co-investors in the equity syndicate. So we have a lot of portfolio companies, and many of which are always looking to add to their equity base. So happy to discuss.
I have a question, and this is more probably directed at GCVF. Do you guys see yourself, or in general, during your seed funding rounds, are you guys typically doing terms as a safe note or other preset terms, especially when a company is pre-revenue?
So we've done safe notes, we've done priced equity, we've done convertible notes. So we're pretty flexible on the actual document. There are scenarios where we'll kind of get specific on, hey, this is actually the right way that this round needs to happen. But in general, we're We're open to any of the kind of typical template formats for equity or venture investment.
I'll second that for the Colorado Angels as well. It's same structures, and we really work to make sure it's what's the best fit for you and where you are.
Chris, do you want to jump in with your question now as well?
Sure. Thanks, Jamie, and the team up there. We're down in Austin, Texas, and our company's Adventure headquarters, and Colorado is where we need to be and where we really want to be. We've got a letter of interest from the Pearl Fund out in Montrose and Doug Dragoo and those guys out there, and I don't expect any complications or conflicts between going down a path with them and with you guys, so that's probably pretty clean. But my question is the fact that we're a Texas company right now, but it is our overall mission to get to Colorado an issue of any kind, or how do we address that?
I imagine this will kind of differ depending on each capital track. So maybe let's just run in the same order as we kind of presented there. So we're going to go Spencer, then Azrael, then I can go, then Patrick can go. Try to keep our answers short. Oh, Spencer, you're muted.
Bad. We're specific to Western Colorado companies or rural Colorado, as it may be. And if there are some commitments in place to bring a certain percentage of the team or location of the team and headquarters here, that is considerable.
Okay, thanks.
Oh, sorry, couldn't find the mute button. So for our track and our policy, usually with the First Southwest Community Fund, the business needs to be registered with the Colorado Secretary of State. So unfortunately, we will need that business will need to be headquartered, already operating in Colorado or originated in Colorado in order to be eligible for our track.
All right, thank you.
For GCVF, so we definitely have kind of hard commitment to make sure that all of our funds go to companies that are truly kind of located and impacting rural Colorado. We have invested in companies that have been in the process of a move, but it does kind of involve, our investment comes with like a side letter agreement where companies can sign and say, we're going to have significant operations based in rural Colorado within I think the maximum timeline for that is 18 months. And our funding, basically, we do have kind of like hard terms in there for a clawback of our funding if companies are not able to follow through on that promise. So that's kind of the like legal framing. For all intensive purposes, we definitely we need to see pretty concrete evidence that the move will be completed. Oftentimes it's got founders that are, hey, I'm already paying rent in your region, whatever that might be, to really kind of make that a concrete move.
Okay, well, it's definitely a top priority for us to get to Colorado. That's where our target audience in the industry is headquartered for adventures and what we're doing. So we're ready to jump as soon as we can.
Yeah, Chris, I'll add that our approach is similar to Jamie's. We would want to see and know that you're actually moving to Colorado. But it just as it relates to your work with Dragoo's and Pearl Fund, if you're indeed moving to or looking at moving to Colorado outdoors, please don't hesitate to reach out. We launched a real estate platform for kind of Western Slope development and are building apartments at Colorado Outdoors. And so we're also investing in companies that are going there or around there and would be happy to discuss.
Okay. All right. Thank you very much for that information. All good news.
Spencer's point about air traffic control. I think you can reach out to all of us and we can coordinate, but that's a separate, business or platform of ours. But we would certainly, it would help if we knew you were moving to Montrose or Colorado Outdoors and anywhere on the Western Slope, but that would be of particular interest.
Okay, thank you very much.
And I think Dan, you are next with a question that you flagged for me in the chat. If you want to take yourself off mute to ask that.
I appreciate the FaceTime and the thing you've put together here. It's very soup to nuts, shall we say? I will just ask one specific question and can evolve from there. The question has to do with the fact that millions and hundreds of millions of dollars of funding are moving into the state of Colorado to do broadband infrastructure. My company's been in existence for over a decade. We know that space inside and out for the Western Slope, sometimes to a fault. But my question is, would your organizations, especially the Angel Group perhaps, be interested in kicking in for a specific community funding to support digital infrastructure that might not get built unless it was done locally? And it's a tough question, but matching funds are part of these grant dollars, and the institutional nature of this infrastructure is very important to the Western Slope. And my company and myself have seen, I'll just say, sometimes if the Western Slope doesn't step up and do it itself, it might not happen. And that's the reason I asked the question about matching funds. And I'd love to get all of your input on that. Thank you.
Spencer, I think you're up first on that.
Yeah, so this becomes a challenge a lot of times with the state or federal grant programs where you have to have like a 1-to-1 or 2-to-1 or even more match. When you win those types of awards, it does de-risk to some degree and create a signal around the prospective opportunity. And so that's good for us as investors. You know, speaking specifically for the Western Colorado Angels, everyone makes their own decision here to invest on a personal level. And so those things do help drive a better, investment memo for us, but it still comes down to individual choice and a complete due diligence of the business, whether or not it's a good fit for the risk appetite for our members.
Thanks for that feedback. And I should probably also mention really quickly for you to answer and the rest, if there are private placements that we see or are able to bring in from large corporates that are sort of national level corporates that build this kind of infrastructure, that private placement is also an opportunity to co-invest in. And I want to find out if any of your funds, debt or venture capital, are interested in those kinds of deals as well. Thank you.
I can jump in real quick for GCF clarification. It is most likely not a fit for us. So one of the filters that we use for investment is basically, is the company serving a customer base well outside of its locality? That's not to say that there isn't like a great large business potentially there and the opportunity is not, but something like that, it's just often kind of shows like we know the market and it might be a great market. It just isn't necessarily scalable to fit with our type of funding. And then infrastructure just tends to be a little bit more like asset heavy. And so we would just be probably an expensive form of capital for that compared to other types like debt.
Yeah, that's most of what it comes down for us is we can help you navigate some of the other capital options that are probably just a better fit. I can currently offer that outside of the West Slope Angels to help navigate, the things, the money that's just going to be lower cost for you, especially you start getting into the bigger investment or infrastructure style projects.
Okay.
So I think that for us, this isn't something that we have historically participated in, so it would be like a newer process for us. I don't know if it would be a great fit. As for our particular track, it is a $50,000 debt for a 7-year term, excuse me. So I don't know how that would fit with the requirements and different layers of due diligence with some of those like federal funds and other government funds. So I'm not sure if we would be a great fit.
Well, I appreciate you all stepping up and answering that simple question. I will just say that on a, well, Patrick, you might be the one person that would be able to see your way clear to participating in some of these grant fund opportunities as a, well, as a debt financer. So that's something that we can talk about.
So Dan, I may have missed something because I'm a bit unclear on what the question was. I heard, are you looking for matching grant type capital or to invest alongside grant funds from other sources, as like the grant funds being kind of the equity and source of capital for the infrastructure play?
Yeah, basically, this is an unprecedented funding sort of response from the federal government that has never happened before. And what it is a way to invest in the places that don't see those investments.
Sure.
And to answer your question, the matching funds can come from all manner of sources, including just simple debt equity. And that's really the reason I mentioned that to you. If you'd like, I'd be more than happy to give you a bunch of examples, but maybe not.
I mean, we would want to see real skin in the game and real equity in addition to grant dollars. Like we don't provide capital to businesses or projects if it's a infrastructure project or what have you that doesn't have real equity capital, at-risk capital. If it's just grant dollars, it's not something that we play in just from experience and credit underwriting. If there's no real skin in the game, we're not interested. But if there is skin in the game and additional grant funds, if it underwrites and makes sense for a debt instrument, we'd certainly be interested in exploring. And certainly interested in improving access to broadband in rural areas, not only throughout Colorado, but through the country. So very happy to talk about that. But as a overall, theme and approach, we want to see sponsorship, and we're not. We could provide equity alongside of it. We're primarily debt, but we have the ability to provide equity as well. But we're not. We're not going to be the lead sponsor, and we would want to see a sponsor with skin in the game.
Well, for what it's worth, I appreciate all of your time. Patrick, I will follow up with you because there are a few details that I think will make you look favorably upon this opportunity. And Jamie, say hello to your brother. Thank you, everybody, for your time. I'll follow up.
Sure.
Thanks, Dan.
Yeah, thanks, Dan. Kiki, are you sending around contact info so that people have the ability to reach out?
Yeah, so on the criteria doc, there is kind of the last line is if people have more questions, an email contact that you've all provided. So if you have additional questions for a specific capital track, make sure to look there. I do want to answer Paula's question to the group. So Paula has a video that she wants to include in her pitch deck, asking if that's if she's able to include that in her upload. You should be able to. Just know that videos aren't required in any way in order to submit, a pitch deck. But it should be able to integrate into your PowerPoint. You should be able to upload that directly into the application.
I would note too, make sure you do have kind of a standalone deck. That's just something to kind of standardize our application. So as the capital tracks do their review, they have the ability to kind of just asynchronously jump through. So absolutely video is helpful and augmented and will get looked at, but I would just emphasize making sure that you do build things to kind of fit the format of the application, because we'll have a lot of applications, so it'll be just tough to jump around formats if we have videos and things like that.
I have a question around funding with multiple people, places at the same time. Is there anything with any of you that would be kind of disqualifying for us if we were also seeking more funding from another area? Is there cap table issues with you guys, or what are your thoughts around that?
I think everyone here should be good to kind of play alongside other investors, or at least we can highlight if there's anything that's not true about that. For GCVF, the only one that I'll call out for us is just if a company is already funded by an institutional venture fund, we would not be able to participate, at least in a subsequent round to them. We could participate alongside though. That generally doesn't really come up with seed stage, but that's our kind of one caveat. Anyone else want to throw out any caveats they have for co-investment?
Oh, sorry, Spencer, would you like to go first?
Yeah, it's all going to be very dependent on case by case in terms of like who has pro rata rights, to existing investments, or if you have certain liens that may get in the way. But I would say overall apply regardless, because again, outside of the pitch series, we can navigate a lot of this stuff most often.
Yeah, and I kind of guess a similar answer as Spencer. I think it would be on a case-by-case basis, especially if the entrepreneur makes it to the next round of due diligence. If there are existing liens, or if we're looking at financial projections, debt to income ratios, and some of those pieces, that's where it may become an issue. But overall, if we would be open to exploring that on a case-by-case basis.
And from Greenline's perspective, no issues at all. We like to work with others and work well with others, so it's not a problem.
Yeah, I guess I'll answer that in a second way. If you are also pursuing capital from another source, we typically play well in regardless. So it's just going to come down to every specific case.
Great. We have about 5 minutes left here. What other questions do we have? Someone's sitting on some idea, some thought. Okay, well, maybe we can end a few minutes early. Thank you all so much for being here. Like I said, at the bottom of that criteria doc is a contact email for each of our capital track partners. If you have a general question around the Greater Colorado Pitch Series, you can either email me or partners@greatercolorado.bc. We'll get those answered for you. Thank you all so much today. We will be sharing this recording afterwards on both our website and through our social channels. So if you want to share this with anyone else or want to review it again, we will share it with you. Thanks so much.
Thank you, guys.
Thanks all. Thanks, Kiki.
Bye. It's good to see you all again.
Thanks, everyone.
Thank you. That was awesome info.